Welcome back to Payment Cloud Explains. Today, we'll be discussing the roles of the acquiring bank and the issuing bank, which are involved in every purchase, refund, and chargeback. Every single one. Needless to say, they're both highly significant to your business, so stay tuned to learn more about what they do and how they impact your financial success. An acquiring bank is a financial institution associated with you and your merchant account. It links up to your payment processor and gives you access to run transactions through the card brand networks. Basically, it lets you accept payments. Whereas an issuing bank is the institution associated with your customer. It issues the credit or debit card that your customer is using to make a purchase and also makes sure that they have enough money in their account. Together, each bank forms both ends of a transaction. When your customer tries to make a purchase, that request goes through your payment processor directly to your acquiring bank. They then request the funds from the issuing bank and upon approval, facilitate the transfer of money into your account. One cannot work without the other. They perform functions on behalf of both you and your customer to make sure that the funds make it to where they need to be, your bank account. And if you saw our video about payment gateways, you know exactly how this approval process works. It's worth mentioning that most banks can act as both an issuer and an acquirer, depending on if they're representing a business or a customer in a transaction. Finding an acquiring bank might feel a little bit like dating. There are a lot of options out there, but you want to find the one who won't shut you down, take your money, or break your heart. Many acquiring banks are looking for low-risk businesses with lots of payment processing history. So if you're a startup, or operating in a high-risk industry, it might be harder to find the right fit. When working with your account specialist, ask them about the risk tolerance of your acquiring bank and how you fit into it. To answer that, they might ask, how often do you need to process payments? What card brands do your customers most likely use? What's an average transaction amount? What's the highest transaction amount? Do you plan to sell online, in person, or both? All of these questions they may ask you. The number one misconception I hear every day is that companies like PayPal, Square, and Stripe are acquiring banks. They're not. Essentially, what they do is they consolidate every business they represent onto their own single merchant account, which they sublet space to. Businesses using this model have no control over their fees, account stability, risk, or even their funds. For many business types, it's only a matter of time before they're kicked off these payment service platforms. In the grand scheme of things, issuing banks, acquiring banks, they're a small part of a larger ecosystem that we help you navigate through. Until next time, thanks for watching and happy processing.